Hi everyone, welcome to a new episode of Crypto Tips. My name is Heidi.
My name's Toby.
I like this guy.
That's a good thing.
Welcome to episode 35 of these AMA sessions. These questions are sent to us by our lovely
Patreon members,
CT Club members.
Yep.
And
we have our portfolio updates, our trade alerts, everything you'd want to know, like what we are looking at, what we are into, our market analysis, everything. So
yeah,
check it
if
out.
you're interested in the CT Club, a link for that is down below in the video description.
Let's get into it.
Okay, first question. Hi, awesome Heidi and Toby. I'm very green learning crypto. Wallets, staking, trading, airdrop, whatever that is. My question is how to simplify all of this when coins are all over the place. For example, different platforms to stake, to store, to trade. When staked, can you add coins? When stored in your wallet, you can stake. I have a Ledger Nano X. I hope this makes sense. Thanks. Okay, so I want to address actually that last question first before I forget. With Cardano, so basically, okay, with staking coins, you have coins in a wallet and you assign those to a validator to begin earning staking rewards. She's asking if you send more coins into that wallet, do they also qualify for the staking rewards?
On Cardano, yes.
Very typically, yes. Cardano is yes. Cosmos might be different. I just did a tutorial on that one. If you want to check it out, you can, if you want to check it out, just do a quick search on this channel for that. But with Cosmos, you might have to assign a new wallet every time you want to add more coins. I'm not positive about that, but generally, yes, you can just deposit more coins into the wallet that's already delegating to a validator. So basically, you're asking how to simplify everything. And actually, I just did a video on a huge update by Ledger Live, what you can use with your Ledger hardware wallets. You have a Ledger X, which is great. That's what I have too. And so Ledger Live is basically an all-in-one wallet interface that lets you interact with a lot of different cryptocurrencies in a very similar fashion. This is one of those abstract concepts that I think a lot of people have trouble understanding because basically, let's say for Cardano, you can plug in your Ledger hardware wallet device into your computer, go to adalight.io, the website, and you can click connect to Ledger. And from there, you are interacting with your hardware wallet. Or you can connect your Ledger into your computer and open the application Ledger Live on your computer and interact with your hardware wallet that way. Basically, Ledger Live is just an interface that allows you to interact with the coins being stored using your hardware wallet. And Adalight is one.
You also have to be careful. Like, don't just think, okay, well, I can use these coins whenever I want. I can take them out. Also, with staking, you just have to make sure that there's no lockup period. For Cardano, there is no lockup period, which I really like.
You do have to wait until you start seeing rewards with Cardano.
Polkadots.
Each coin is different.
28 days, I think.
28 days. Cosmos is 21 days. Each coin is different. So just because they're all stored on Ledger Live doesn't mean that they're all playing by the same rules. There's still different cryptocurrencies with different cryptocurrency networks that function differently. Basically, Ledger Live had this big update now, so they've been introducing staking coins pretty regularly the past year. Now you can interact with decentralized exchanges right on Ledger Live, like for example, Paraswap, which is awesome. And you can buy and sell cryptocurrencies right on Ledger Live. So it's becoming a kind of one-stop shop.
And if you want to buy a Ledger, please use our
We have an affiliate link down below.
It's probably around here somewhere, right?
No, it's going to be down below in the video description.
Okay,
because it's not clickable if I make it on the screen.
Okay.
So yeah, Ledger Live is becoming like your one-stop shop place. But right now, I've read the privacy policy of Ledger and with Ledger Live, and I'm okay with it because they're not collecting any data, they're not selling it, whatever. What you'll have to pay attention to is other platforms that are partnering with Ledger Live, for example, Coinify or Wire. These platforms that allow you to buy and sell cryptocurrencies, they have their own privacy policies. They're collecting your data in however they are seeing fit. But so for a lot of people who might be concerned, and rightfully so, or a little bit paranoid about how this whole concept of a one-stop shop is becoming too convenient, meaning a lot of information is being transmitted using Ledger Live. Pay attention to the data that they're collecting and the length of time they will be keeping that data if they're selling it to other people. Again, like I said, as of right now, I'm okay with the privacy policy of Ledger. I've read it several times, and if you haven't, I highly encourage that you do. Next question. Something that has confused me for a long time is the number of Bitcoin out there and yet to be mined, and all the talk of everyone having it and using it. Clearly, there is not enough to go around to all the humans out there. And now, with so many companies buying up so many, they will hold the monopoly on Bitcoin. So how is El Salvador and other countries going to be able to have everyone using and owning Bitcoin? Any thoughts?
There is some truth to that. So there's about 60 million millionaires in the world, and there's
way more than that, just people in the world.
yeah, and you know, there's probably only about 16 million Bitcoin, 15 to 16, maybe even 14 million Bitcoin that will ever be available because of lost coins and so on.
Yeah.
But one thing that a lot of people don't understand is that Bitcoin is divisible by, I mean, how much is it divisible by?
By 8 decimals.
Yeah, so 8 decimals, guys. Like,
I think he's right in saying that not everyone will have a full Bitcoin. I think that's accurate.
No way. Most people not. No way.
We're going to be valuing things in terms of Satoshis because the very smallest unit of a Bitcoin is called 1 Satoshi, and that equals 0.0000000001 Bitcoin. So,
yeah. So right now, people talk in terms of Bitcoin.
Yeah.
Oh, 1 Bitcoin is worth this much, 1 Bitcoin is worth that much.
Yeah.
People aren't going to be talking about that anymore. They're going to be talking about sats, Satoshis. And because the number, Bitcoin will be literally so expensive, whether it's due to hyperinflation or whether it's due to incredible amounts of inflation or currency printing around the world. And demand with a non-elastic supply, which Bitcoin has, because of all of those characteristics, I think that Bitcoin could be worth, you know, it could go to hundreds of millions of dollars.
Yeah, if you're talking about hyperinflation, you know,
billions.
Zimbabwe had $100 trillion bill. So
Yeah, we were there, and we actually.
Not at the time, but we have some of those bills.
Yeah.
But this whole concept of like there's not enough Bitcoin to go around for people, I think that's a common misconception with Bitcoin that people don't understand, is that it's divisible. And also, not every cryptocurrency is actually divisible, which is interesting. Like I think Neo is one of them, where like you have to send full integers of the coin.
Really?
Yeah. Or some of them are only like in
Okay.
like 0.5%. Not all of them are divisible by 8 decimals. So yeah.
Neo, wasn't that supposed to be the Chinese Ethereum?
Yeah, I think it still is.
It still is? Okay.
It's still trying to be.
Sure.
I don't know. There's a lot of those.
Yeah.
Anyway, so do you have anything else to add for that?
No. I think you're fine. Like, don't worry about people that are saying, okay, there's not enough Bitcoin to go around. Just relax. There's plenty of Bitcoin.
Also this concept of companies buying up so many, they will hold the monopoly on Bitcoin. The more they buy, generally, the higher the price goes and the less Bitcoin they can actually afford to buy. If you're thinking about the monopoly on the supply, you'd be more concerned of these wallets that are holding millions of Bitcoin that mined it in like 2010.
Yeah, and also, you know, hedge funds and big, you know, family offices that hold, you know, are trying to hold 1 million Bitcoin or hundreds of thousands of Bitcoin, you know, that they want to sell as well because they want, it shows up really well on their balance or on their sheet, their performance sheet. And people, you know, will be attracted to like, hey, look at us. We made, you know, 500% in the last year because of Bitcoin. When people see that, they're going to want to go ahead and pour more money into their fund. And so that really attracts other people. And I think that's where, you know, that's how it becomes more decentralized. And then actually going into China, that, you know, miners are now forced to decentralize. They're not only forced to be decentralized, but they're also forced to use better, more cleaner or more efficient forms of energy, such as like, you know, solar or whatever else, to kind of actually stay off the grid because they know what governments are capable of. I mean, look at what happened with, was it South Korea? that they they bulldozed?
That was in Malaysia.
Oh, sorry. So
But I think they've changed their regulation a little bit. But they bulldozed in Malaysia. They bulldozed a whole bunch of mining rigs.
yeah. So this is like, that's really important to understand that. This is why things will be even more decentralized, because people are going to kind of go underground a little bit, because they're like, well, shoot, I don't want like all my mining equipment bulldozed. That would suck. And governments have a very bad reputation with, stealing people's wealth and destroying, something that's going to compete against their local currency.
Yeah. Yeah. So yeah, just that concept of companies buying up Bitcoin and they're just going to hold it for forever and no one's ever going to have access to Bitcoin. Like you said, it's a great point that as they sell to take profits, they're not going to be able to buy back those Bitcoins at the same price. They're going to buy back higher or buy back less Bitcoin, and it's actually going to distribute the supply over time. So
yeah,
it's really cool how game theory plays out and psychology plays out with markets with something like Bitcoin, an inelastic supply asset that can't change based on the demand. It's really cool. Anyway.
That's it for today. Thank you for joining us. Please like and subscribe and stay disobedient. Don't follow the sheep. Follow us instead. Talk to you soon.
Bye, guys.
Bye-bye.